What is up, moneymakers? Today we're going over stock updates for NIO, and more specifically we're talking about 2 ways China is going to dominate the EV market and what this means for NIO, as well as number 2, NIO's path to profitability and 2 ways I think they're going to reach there, and number 3, the stock price forecast for NIO in the next 12 months. So stick around until the end. I think you're going to like all the research I did. And with that, let's jump into the stock price. So as of close October 23rd, we see NIO was trading at $27.16. More recently, however, we saw that the stock has jumped around 30%, hovering around there. And of course, this is when JP Morgan analysts actually transferred NIO into a buy rating. And from there, we saw the prices has been remaining relatively steady. And this is what we're expecting, right? Because every time we've seen the stock price jump, we see that the price actually plateaus a little bit, plateaus a little bit. And that's what I'm personally expecting right now. It's going to jump, it's going to drop a little bit, it's going to pull back a little bit, but then it's going to plateau at that price. So where do I see the stock price going in the next 12 months? It's going to be at the end, because if I announce it now, what is the fun in that? And by the way, moneymakers, I started a free Discord channel for all of us where we can talk about stocks, research, and investing and anything in general. It is free and open to everyone for a limited period of time, so make sure you join before that limited period of time closes. Since I posted the NIO stock analysis, I realized that there's actually a lot of divide between people who are saying that Tesla is the almighty EV stock and NIO is a scam, or on the flip side saying NIO is the next best thing and Tesla is pretty much over. And although I do understand the sentiment, I do want to say that I think we should really form an alliance and make peace with everyone, because the EV market is not a zero-sum game, meaning that just because Tesla wins does not mean that NIO loses. The market is absolutely huge and there is room for many different players, especially in different countries. However, we truly cannot ignore the massive amount of influence that China has within the EV space, and not only in terms of demand, but also in something else. Firstly, let's talk about demand. China is the world's largest battery electric vehicle market with 2.3 million EV vehicles in active use. That's nearly 45% of the global stock of BEVs. Shows that China was the biggest market for BEVs in 2019 with 830,000 vehicles sold, compared with 365k in the EU and 272k in the US and Canada. And by the year 2025, the Chinese government is targeting that 25% of car sales will be EV as part of its plan to reduce pollution. So not only has it historically been a dominant force, in the future, it's expecting to be even a more dominant player. The second reason is because of these bad boys right here. And not necessarily Duracell, but more so about batteries that power the EV vehicle itself. Because in order to actually produce these batteries for EV vehicles, such as Tesla, such as NIO, is that these batteries are made from rocks dug out of the ground in Russia, China, and in parts of Africa, often controlled by Chinese interests. China pretty much controls these minerals, these critical minerals that manufacturers such as Tesla and NIO need in order to actually create the batteries and sell those vehicles. And China is realizing the impact and influence that they have in the EV vehicle market, because the Chinese legislator passed a new export control law that has the potential to limit or ban exports of rare earth and critical minerals. And this new law is pretty impactful because, as we are aware, the Chinese and US trade relations is not that positive right now. In fact, the United States is more dependent than ever on China to import these critical minerals for not only defense applications, but also electric vehicles. So this is a really important factor to realize, especially if you're interested in EV sectors. And you can draw the comparison in that the entire world is dependent on one country for oil or for gas or whatever in order to power the entire planet. Now, of course, that's a little bit exaggerating, but you can draw the parallels, right? You can see that China mainly controls these minerals in order to produce these batteries for EV. Now, if we extrapolate this even more and put it to even more extreme, and I personally don't think this is going to happen, but if China truly wanted to really dominate this space and put NIO or their other Chinese EV companies in the forefront throughout the entire world, they can simply increase the price of these minerals throughout the entire world, and that would substantially increase the price of EV vehicles from other manufacturers, and people would be forced out of economic reasons to purchase a Chinese EV product. Now again, this is a very high extreme. I don't think anything like this is actually going to happen in the future, but it's interesting when you start thinking about the massive opportunity China has in controlling the EV space. Now, it's not all gloomy, right? We can see that there is some optimism within the US market at least. Tesla's co-founder, Strobel, is trying to turn his 3-year-old company, Redwood Minerals, into the world's top battery recycling company and one of the largest battery material companies in the United States. Now, before we dive into NIO's pathway to profitability, I truly appreciate if you guys go down there and turn that like button into a beautiful blue. And if you are new to the Moneymakers investing community, make sure you smash that subscribe button and ring the notification bell to get the greatest and latest 2 videos every single week on personal finance and investing. Now, the next aspect is profitability. If we actually check out the company's projections, they expect to become profitable in the next 12 to 24 months once it doubles its current monthly sales. And if we check out the actual deliveries for the past 6 months, we've seen that it's pretty positive. It's been growing pretty substantially. Now, in terms of the actual vehicles that they are delivering, it's a 3-product lineup that is primarily focused in the SUV industry. However, if we actually check out the market in China, the demand for vehicles or passenger vehicles is 50-50 SUV and sedan, meaning if they want to start capturing that other 50% of that sedan market, they need to produce a sedan product, which, by the way, is super exciting because NIO has recently announced an electric sedan. So essentially, these are some nice teaser pictures, and they're going to be naming it the NIO EE7, and the availability is expected in the year 2022. And their second way is actually expansion into the global market, and more specifically, they're targeting Europe as one of the prospective markets that they have been considering very seriously. And although expansion into Europe sounds really good, I personally think that NIO is going to be facing quite a bit of challenges. And historically, we've seen a lot of Chinese manufacturers try to enter the European market, and they've been facing an uphill battle for a couple of reasons. One is that there is skepticism around Chinese manufacturer vehicles. Even though NIO is premium, there might still be some lingering biases there. And the second is that there hasn't historically been any massive uniqueness or differentiator between Chinese vehicles as well versus European vehicles. However, I think NIO has a massive unique differentiating factor and trick up its sleeve. Now, if you're a fan of NIO, you probably already think you know everything about the battery as a service. However, I'm going to be blowing your mind with a little bit more information that I haven't seen anyone talk about. The first one is, I'm sure you're well aware that NIO recently announced that they're going to start selling their NIO vehicles with and without the batteries, and the price points are going to be pretty influential. So the cheapest NIO car after subsidies is now an ES6 SUV, which costs about $39,000, which is rounded to $40,000 for some clean numbers, without ownership of the battery pack. With the battery pack, it's going to be $49,700, which will round up to $50,000. So the price difference is $10,000. Now, for those that purchase the car without the battery, obviously, they'll need to rent the battery in order to actually use the car. So what we want to calculate now is what is the break-even point. So again, if we see that the cost of the battery is $10,000 and it costs $140 per month to actually lease that battery, we simply divide it by 140, and we can see that the break-even point is around 71 months. We can divide it by 12 and determine that is around 6 years or 5.9 years before that break-even point. And 2 things you need to realize at this break-even point is that NIO starts profiting because you're actually paying even more than what you would have paid for just that flat-out $10,000 battery. And I know there's also inflation and there's opportunity costs in here, but we're not going to be factoring that into this straight calculation. However, there's also a win for the customers, and perk your ears and pay attention why. It's because the advantage of leasing a battery or being able to swap a battery is pretty massive when it comes to EV vehicles, because battery technology and EV battery technology is pretty recent, and it's growing extremely rapidly every single year. And this is important because batteries degrade over time, meaning that they're not going to be as high capacity as they previously were. And instead of just purchasing a brand new vehicle to get that new battery capacity again, you can simply swap it out. So you can advance the actual battery you have in your vehicle as a NIO customer without purchasing a brand new vehicle, which is something that no other EV manufacturer currently can compete with. And finally, let's get into the 12-month stock forecast for NIO. So like we mentioned, it's currently trading at $27.16. So if we check out the forecast from 16 analysts, we're seeing on this chart within the next 12 months that there is a high forecast of $269.54 and a low forecast of $44.12. cents. So I personally think that it's going to be hovering along the lower side, at least trying to be a little bit more realistic, because there's a lot of unknowns in the future, right? Not only in the upcoming US election, but also how the COVID-19 situation turns out and how quickly the economy, worldwide economy, is going to be recovering. So regardless, even if it's on the lower side of $44.12, that's still a plus 62.5% increase within the next 12 months, which is nothing to laugh about, especially if you consider NIO's stock right now, at least within the past 6 months or year to date, has increased by over 630%, which is a substantial amount. But of course, this is just my guess. No one has a crystal ball to see in the future. And as always, guys, I am not a financial advisor. So before you make any investing decision, please do your own research on top of this video and on top of whatever research that you've done so far. If you want to learn more about NIO as a company, check out my very comprehensive stock analysis here. Or if you want to check out a US EV manufacturer, check out my video over here.